So, how to calculate ROI when you invest in Dubai real estate? Very important point. Sometimes people omit to add into the ROI table. Definitely, the area which you choose should be suitable, should be future visioned area for the growth. Should not be an area which is coming to closer towards some negative points. There are a lot. I will consider like there must not be any what you call high tension power lines which you cannot see on the map, but physically it's there. Some water disposal centers, some landfill areas. Definitely these are very negative points, very far from the center, not convenient. The public transportation is not available conveniently. So there are many factors which you should consider before moving on towards, when you consider the investment for a return. Then what are the points you need to calculate? If everything is good, then you will go for if you will go for off plan, or you have to make a decision between the ready property, whichever is convenient and good as per your budget. Say if your budget is something, you should go for a property which is ready to move. Definitely you should go for that one, which should comes with the appreciation as well. It shouldn't be like what you call the return comes on off plan only. Definitely it comes from the secondary property as well. Depends up to the volume of the budget you are coming with the investment. So if you think it's good for you, the off plan is good for you, definitely you will go for that one. And what points you will consider in calculating the ROI in both properties, like what are the down payment, till what time you are going to pay for periodical installments. There are some balloon payments in there, like every 6 months you have to pay a certain increased amount of installment, which shouldn't go beyond your budget. Then there are certain amounts you have to pay at the time of handover. There are certain projects which offer different payment plans, like a project is offering you a payment plan with post handover facility, means over there you can save some of your capital, and the post handover installments you can pay the partial parts of that, you can pay from the rental income as well. There are certain developers who are offering you a property with guaranteed rental income up to a certain time period. Even some developers are offering you 7 years, 5 years, 10 years rental income assurance. So everything you have to consider. In ready property, you have to see what are the taxes you have to pay. If you are paying the value-added taxes, what are the service charges you have to pay every year to calculate your rental income. On those basis, you will definitely you calculate your return on investment. So these are what are the rent you are going to take from that property, the commissions you are going to pay to the brokers for the property management. If you have some agreement with them, what are the amounts you have to consider, those amounts, the amounts you have to pay to DLD at the time of transfer. Usually it's 4% amount you have to pay to the DLD when you transfer the property. So the percentage is there. You have to pay a certain percentage to the DLD. So all those points have to be considered while you calculate the ROI, not just the rental income and the capital appreciation. You have to consider the operating expenses as well. So definitely we have a set of certain rules and a whole table which actually we put every figure in there, and then we will let you know what is the best option for you to move ahead. It all depends from budget and the timelines for your payments and the payment plan. Definitely everybody is having a different timelines for the budgets as well. So once you'll be ready, we'll be available for your consultancy, and we'll love to have a meeting with you. We'll have a sit up and we will show how some property is beneficial for your long-term or short-term investments. Thanks a lot for staying with me.